Washington, April 9th, 2025. For 4 straight trading days, American stocks have been falling. The trigger was a tariff plan aimed at almost every U.S. trading partner. Markets did what markets do when they cannot price the future. They panicked. By Wednesday morning, the S&P 500 had lost roughly $5.8 trillion in value, and investors everywhere were watching one man's phone. At 9:37 a.m., President Donald Trump posted, "This is a great time to buy." He did not explain why. At 1:18 p.m., he paused most tariffs. The S&P 500 jumped 9.5%, its best day since 2008. Anyone who bought the broad market between the posts caught a historic rally. So, who bought? The public record does not give us a clean answer, but it reveals a much bigger problem. A normal insider trading case starts with 2 things: secret information and a trade. Investigators ask who knew the information, who used it, and who made money. For nearly a century, the law has been learning how to answer those questions. A president changes the equation. His decisions do not simply predict the news, they can create it instantly and on a global scale. That does not make every well-timed trade illegal, and there is no proof that Trump directed the unknown trades in this film. The problem is the conflict built into the system. Presidents are exempt from the main federal conflict of interest law. Most modern presidents still created distance from their wealth through divestment or a blind trust. Trump did not. Instead, his assets sit in a trust managed by his children, while the Trump Organization says outside investment managers handle the portfolio. His latest disclosure runs 927 pages. Across crypto, stocks, and energy, it keeps bringing us back to one question: where does public power end and private profit begin? Start with crypto. Trump's latest disclosure reports over $1.4 billion in crypto income for 2025, more than half his total reported income. One of those assets was the Trump meme coin. Trump-linked companies controlled most of the coin's supply. They could earn fees as it traded, which meant attention was not just useful. Attention was the business model. Then the project offered its biggest holders something no ordinary cryptocurrency could: dinner with the President of the United States. The top 220 holders spent an estimated $148 million competing for a seat. Whatever else was being sold, the prize was proximity to power. Imagine an ordinary buyer. The president has a coin. The price is climbing. Everyone online looks rich. You put in a little hoping you arrived early. The coin launched on a Friday and briefly climbed above $75. Then it collapsed. Early estimates found creator-linked wallets earned $86 million in trading fees in less than 2 weeks. At one count, 764,000 wallets were losing money. The people who arrived last were not early. They were the exit. Critics called the pattern a pump and dump. But meme coins sit in a far murkier regulatory space than stocks. That does not make every kind of manipulation legal. It makes accountability harder. Now return to that week in April. April the tariffs are announced. 4 days of losses follow. April 9th, 9:37 a.m. Great time to buy. At 1:18 p.m., the pause. 3 hours and 41 minutes separate the 2 posts. Closer to the pause, some traders bought cheap, short-dated options that would pay off only if the market rebounded hard and fast. That is exactly what happened. Who placed them? We do not know. Reuters found unusual timing, but no public evidence shows the traders knew a pause was coming. What we do know is simpler. The one person who could stop the fall told the public to buy. Hours later, he stopped it. If you owned stocks that week, the pressure was real. Prices had fallen day after day. Retirement accounts were shrinking. Some people sold because they could not afford another drop. Then the policy changed, and the market snapped back without them. The people on the other side of those trades got the best day in the market in 16 years. The disclosure records repeated NVIDIA purchases in 2025, including one worth $1 to $5 million. Later, the administration approved advanced NVIDIA chip sales to China. That is not proof of advanced knowledge. The Trump Organization says independent managers made the trades. But without a blind trust, the public must trust a separation it can't fully inspect. Oil shows why that distinction matters. In March 2026, trading surged shortly before Trump announced that planned strikes on Iranian energy targets would be halted. The Post sent crude prices sharply lower. Once again, a sudden presidential decision created winners and losers within minutes. And once again, we do not know who placed the best-timed trades. Lawmakers asked regulators to investigate, but timing alone is not evidence of inside knowledge. The disclosure lists oil producers including ConocoPhillips, Northern Oil and Gas, Magnolia, and Murphy. But those shares are not short crude bets, and they do not identify the futures traders.
And crypto is a big deal. You look at it, the way it's grown over the years, you have believers, you don't have believers, whatever it is.
When this clip went viral, one caption turned a journalist's summary into Trump's words. But he never said that sentence. And in a story about evidence, that distinction matters. What he actually said was, I could know about it. I didn't. I mean, there's nothing illegal. There's nothing wrong with it. He said Eric handles the portfolio and that they do not discuss it. That is his defense, not a confession. No court has found the conduct shown here illegal. Insider trading cases depend on evidence: who traded, what they knew, what duty they had, and what they intended. Here, the traders are often unknown. The portfolio is privately managed, and the president is exempt from a conflict law that binds most executive branch employees. So the documents can reveal exposure. They cannot, by themselves, reveal motive. The holdings are not a rumor. They are filed, signed, and public. What they mean is the argument. Past presidents tried to put a visible wall between the office and their money. This arrangement asks the public to trust a wall it cannot see.
I didn't. Right. I mean, there's nothing illegal. There's nothing wrong with it. I could know.
Maybe every trade was independent. Maybe every decision was lawful. But when one person can move a market and benefit from assets in it, maybe is not enough. The real danger is not one trade we can prove. It is a system the public can't fully verify.